Hello everyone, welcome back. This is Twisted here from 𝗠𝗔𝗥𝗞𝗘𝗧. Today we'll be going over Ethereum price action starting from the monthly time frame, dropping all the way down to the 4 hours. Find out what the drawn liquidity looks like for the end of the month and upcoming months. So let's get started. So looking at the monthly time frame, we do have this is just a time frame that mostly a lot of people do not use. Whoever is either if someone is trading swing trade, then yeah, this is a time frame that comes into consideration. But if you're using intraday or any sort of scalping, this comes very end. But I'd like to start from the high time frame, dropping all the way down to the low time frame to set the narrative right and see what the draw looks like. So looking at the past 6 months, we do have upward price action all the way up until July, where we have some sort of pullback. Because look at the month of January, February, March, April, May, June, all the way up until June. We just had price action to the upside, but now we are closing and we are coming to a point where we are 7 days away from the closure, and we are rejecting our of important zones, and that's for fair because we have come into an important zone which is on the monthly time frame. That is the CB, or the sell side imbalance, buy side inefficiency on the monthly time frame, which was tapped in and then we rejected. This was tapped in the month of April. We started to reject from there. We came back down into the March candle, and then we pushed up from there, tapped again, and now we are rejecting, and now we have a rejection to the downside. Now we have an expectation that eventually this wick will become the drawn liquidity, or if not, this area of this wick will be our next drawn liquidity to the upside or the downside. So quickly forming ranges for your analysis on a higher time frame. This is an easy way of doing it. So we just do this range high, and we just change this from that to, so that's your monthly high and that's your monthly low. This is not the conventional way of range forming, but it really helps out eventually. This is just the way I do it. You feel free to do the way it works for you, but it helps me. And this just guides us that where price may be going and where transaction may happen eventually before we start breaking down, or we may start impulsing back up. Looking at the 50% of that, so we do have price action which is in the 50% of the monthly time frame. So right now we are at 1848, which is right below the 50%, mitigating the discount zone areas, and we may see some bullish price action from here, but we do not know just yet that if we may see something like this, or we may just start seeing it drop down. But looking at the monthly time frame, this is what my monthly range looks like. Drop down to the weekly, this becomes a little bit better to work with. So just refine that a little bit better here. Okay, on the weekly time frame, we do see that we have a break structure to the upside on here, which price, there you go. So we have a breaker structure on the upside, price is impulsing up. So this was the initial leg that pushed the price down. We start to impulse up, higher lows are formed, breaker structure, now we pull back. Every time we have a breaker structure, we start to pull back. So looking at this price action, we do see we have some relative equal lows, but that's in previous year, so a little bit too far on the weekly. But looking at just this leg, how we have pushed down, so this was the last sell side liquidity that was generated that broke the low. So this area and that area hold importance for our narrative. This is the low that took out that high, and this is the high that was taken out, breaker structure to the upside. Now we're pulling back. Now on the weekly time frame, we can range it from here, from low to high. Look at that, 50% mitigation. We do not have any closure below the 50%. We pushed up. We took out the relative equal highs. We ranged. We took this sort of very slightly, and then we pushed down. So we look at that as minor sweep, and then price is pushing down from there. So we are looking at this price leg. This low and that high becomes important. So we can range from here to here. Where are we sitting at? We are sitting at just right above the 50%. And what do we have in the discount zone on the weekly? We have an important PD array, which is our demand fair value gap. So we remove that. Now we have an important array that we would like price to mitigate eventually, drop below into this, push up, and then take the sell side liquidity, drop further below into the range of this wick. So one more thing we can mark out is the 50% of this wick, which becomes an important zone, and we can use there you go. So that's the price action or the price level 1463. That's the 50% of that wick that we may want price to come back down if we take this low. But initially, this low will become our first round liquidity, and this will be the low that we want price to run. This is the high that was just left. We're pushing back down. We may see a decent reaction from here, but this is on the weekly time frame. So this is for people who are swing trading. And now we can drop down to the daily time frame, start forming our intra-week analysis, narrative for where price may be expanding towards for the end of the month, and we can start forming trade narratives. So this is what we saw on the weekly. We just clean the chart up a little bit here, and looking at this on even on the daily, we do have these relative equal lows. So these are not even relative, they are equal lows, which are formed right in the discount array of the daily swing, which is also the weekly swing. So this was a discount demand that is sitting right here, but it's not mitigated. So we pushed all the way down. We did not mitigate the fair value. We pushed away from there, and now we are failing to close above. It's a little bit different compared to BTC. BTC, we have cleared lows, but right now on Ethereum, we see a little bit of stronger price action where we are impulsing up, push down, 3 drives pattern again, and this is where we are at the moment, swept the highs, and now we're breaking below the lows, but we have just yet to break below the lows. We are just forming this trendline liquidity, which eventually will run like something like this, and then we can drop down into this fair value gap. This fair value gap was mitigated, so this area becomes an important price leg, but this will be our first reaction point. If we drop below, then this will be our second reaction point. Third reaction point will be just taking out these lows, and then we have this fair value gap on the weekly swing, which is also the daily swing. Price up, price went up, we pushed back down into the discount, we went back up, we are forming what relative equal highs. So we have a minor sweep of the but yeah, nothing strong at this point. And we also, when you look on the left hand side, we do see that this is a fair value gap that was mitigated all the way up to the 50%, and we do not have a body closure above that, so we can mark that as this. So change this to, so we do not have any body closure above that, so we may see some price action getting deferred to the downside on the daily, and then we push up for the final push down. But that's something that can happen eventually. But looking at the daily time frame, this is what I'm seeing. These are some important zones that I would like to mark out on the daily. Will be this fair value gap and this fair value gap, which was just mitigated once. So order flow kicked in, longs were open just to take out these relative equal highs. So this is all liquidity generation. These relative equal highs were taken out in this push up. We pushed up, lows were formed, pushed all the way up, took the highs out, and now we are reversing into these lows, and then we may eventually take liquidity and we may start dropping. But something to be mindful of on the daily, basically. So nothing at this stage. We can have a very quick drawn liquidity that will go on the daily, will become this price leg where this low will eventually get run. We have bearish narrative. We are forming bearish or supply zone or bearish order flow where price is struggling to make higher highs, and bulls are finding it difficult because of course we did mitigate an extreme level where early shorts were open, they distributed down, now they went to rebalance their shorts. So of course, we can form narrative based on they will eventually want price to come all the way down into the discount array. But yeah, so this is on the daily. This will eventually be our first drawn liquidity for the downside, and then these two price action, price delivery arrays. And this is the weekly, which is in concurrence with the daily. So we can change this into fair value gap here. So two fair value gaps. That's the weekly. That's the daily, and that's our extreme discount. So we'll just leave it at that. Grading this price leg as well, we can have a look at this high. Just is right around the point where 50% was tapped, and we have push up, but nothing significant. We didn't take this high, so yeah, just be mindful of that as well. Dropping down to the 4-hourly time frame. Looking at this, what do we have? What do we call those? Price pushes down, pushed up. Okay. So we do have a trendline liquidity forming around here. So this is something that's important to be mindful of. This is buy-side liquidity that is getting generated, and eventually we may see some mitigation of that. And also there is a fair value gap that is just around here on the 4-hourly time frame that is mitigated once, twice, and then we drop down. Took the lows, market structure shift. We have not taken the highs just yet after that. So looking at immediate imbalances where fair value gaps were tapped, pushed down, liquidity generation, push down, liquidity generation, push down. So this is what I'm looking at here. Supply, there we go. Supply, we went up, cleared, pushed down, lows were formed here. So these are the lows that were taken. And then this is the next fair value gap that was formed around here on this push down that we mitigated the second time, and then lows were generated in the mitigation of that, and we have cleared them. And now what do we have? We have clean price action, immediate price action is delivered, but this stays pending. So we have this area on 4-hourly time frame. So if we push up, take these highs, start forming higher lows, and we can expect that these highs will get targeted, and then we may target eventually these highs into this fair value gap before further price drop. If not, we can definitely see a meltdown directly from here into the higher time frame fair value gaps. But just this is the 4-hourly time frame narrative based on price action, and also at the same time the order flow analysis of it. So just like that. So that's the immediate drawn liquidity for the daily time frame. These are the levels that eventually will get targeted. You see when you swipe to the left hand side, this low, this was the lowest low, this high, this low was not swept, this low was not swept, this low was not swept. So we are definitely building liquidity right above the important point of interest zones. So we can definitely see something like this, or we can definitely see a drum. But just be careful with any sort of price action. Highly recommend taking shorts in the premium. Do not try shorting here, because you may eventually get there's a high possibility that the price can just reverse on you after mitigation of high time frame zones. So this is a more probable scenario where the lows will get swept, and then you may start seeing higher lows where you can just take a counter trend entry, and then we can just look at confirmation and ride the price up into these zones or these zones depending where the price starts exhausting. Once we reach here, we can start looking for bearish price action. We look at some PD arrays that get formed, and then we can take our eventual shorts from there. So that's my analysis on Ethereum. So hopefully you guys enjoyed it. Leave a like down below, and speak to you guys later. Have a good day. Thank you.